The July real estate numbers are in, and at first glance, they don't seem to make a lot of sense.
Some properties became more competitive, some buyers gained negotiating power, and new construction delivered one of the biggest surprises of the month.
But the real story is hidden beneath the averages.
Because two homes in the same market can have completely different results depending on the location, property type, condition, and competition.
Today, we're breaking down the July closings across the Grand Strand, and then we'll take a look at the Carolina Forest area, oceanfront condo buildings, and new construction.
We'll compare July directly with May and June so you can see which trends are continuing and which ones may be changing direction.
And be sure to stay with us until the end because we'll give you the 3 biggest takeaways from the July numbers,
including where buyers may need to move quickly, where they still have the most leverage, and what sellers need to understand before choosing a price.
Now let's get into the actual numbers. Wait, before we get into that, have you hit that subscribe button yet? If not, make sure to do so and ring that notification bell so you don't miss out on our weekly videos. Let's begin with single-family resale homes across the Grand Strand.
This market tightened dramatically between May and June, and July did not reverse that trend.
In May, there were 6.3 months of supply.
In June, that dropped to 4.2 months.
And in July, it tightened again slightly to approximately 4 months of supply.
That tells us the major inventory shift we saw in June was not just a 1-month event.
Prices also strengthened.
The average sold price was approximately $544,000 in July.
And that's an increase of $58,000 from May and $26,000 from June.
But this is where the story gets more interesting.
Even with the tighter inventory and higher average sold price, homes closed at an average of 96.3 of the list price in July, so buyers are actually still negotiating.
This is not a market where sellers can choose any price simply because inventory is lower.
The average active list price is approximately $626,000.
In July, homes averaged 105 days on market. That was almost unchanged from May and June.
So homes aren't just suddenly selling overnight.
But with fewer months of available inventory, the best homes may attract attention more quickly.
For buyers, you need to be prepared to act when the right property is priced correctly.
For sellers, this is encouraging, but do not mistake tighter inventory for permission to overprice. Now, let's look at Grand Strand condos and townhomes.
This market continued to improve from an inventory standpoint.
In May, there were approximately 8.2 months of supply.
In June, that dropped sharply to 5.9 months.
And in July, it improved slightly again to 5.7 months of supply.
Days on market improved from June as well, averaging 131 days on market in July.
But while inventory and days on market improved, the average sold price moved in the opposite direction.
That's right, the average sold price was approximately $239,000 in July.
That is a $25,000 decline from June.
But before anyone says that every Grand Strand condo lost almost 10% of its value, remember that an average sold price is heavily affected by what types of units closed that month.
More smaller, older, or lower priced units closing can pull down the average without every property declining by the same percentage.
But it does tell us that buyers remain price sensitive.
Condos and townhomes closed at 96.9% of list price on average.
And that's slightly down from May and June.
The current average active list price is $262,000.
So the condo and townhome market is healthier than it was in May.
But healthier does not mean every property is easy to sell.
For buyers, there may still be negotiating opportunities, especially on properties that need updates or have been sitting on the market.
For sellers, price and presentation remain critical.
Your competition is not just the condo next door right now.
It is every property the buyer can compare based on total monthly cost.
Okay, now let's move into the Carolina Forest area, which remains one of the tightest resale segments that we're tracking.
In May, Carolina Forest single-family homes had approximately 5.7 months of supply.
And that dropped to only 3.6 months in June.
And in July, it held most steady at 3.7 months of supply.
July wasn't a major reversal.
The average sold price came in at $524,000.
And that's lower than June's unusually strong average of $561,000, but still above the May average of $488,000.
This may look more like a normalization after June's price spike than a major drop in the Carolina Forest market.
Days on market also improved slightly.
And the list to sale price ratio improved from 96.3% in June to 96.9% in July.
So homes sold a little faster, sellers received slightly closer to asking price, and months of supply remained tight.
So if you are buying a single family home in Carolina Forest, you may need to move quickly on an updated, well-priced property.
Definitely, but you should still negotiate based on the condition, the comparable sales, the age, lot, upgrades, and location within the community.
If you are selling, you are in one of the stronger segments of the Grand Strand market.
But the strongest listing is still the one that combines the right price, the right condition, marketing, and presentation.
Carolina Forest condos and townhomes may be the quiet winner in the July report.
In May, this segment had approximately 8.4 months of supply. In June, it improved to 5.2 months, and in July, it tightened further to 4.7 months of supply.
That is approximately a 44% reduction in months of supply compared with May.
Wow. Days on market also improved consistently at 120 days on average in July.
The average sold price was $207,000.
Now that's lower than June's $220,000 average, but higher than May's $198,000 average.
The average list to sale price ratio is 96.9%, slightly down from June.
And as we enter August, this segment has fewer active listings, fewer months of supply, and homes are selling faster than they were 2 months ago.
For buyers, there may still be opportunities, but the window is becoming more competitive.
And for sellers, this is a much healthier environment than it was in May.
But buyers still expect value, good condition, and a clear understanding of HOA expenses.
Okay, let's talk about oceanfront condo buildings because this is still the segment offering buyers the most leverage.
In May, oceanfront condos had approximately 10.3 months of supply.
But in June, that improved to 8.7 months.
But in July, inventory moved back up slightly to 9.1 months of supply.
That's still better than May.
But it shows that the June improvement did not continue in a perfectly straight line. Buyers are purchasing oceanfront condos.
But there's still a lot of properties available relative to the current pace of sales.
However, the average sold price rebounded sharply in July, increasing to an average of $334,000, a $41,000 increase from June.
But that doesn't necessarily mean that every oceanfront condo increased 14% in 1 month.
It may mean a greater number of larger, renovated, direct oceanfront or higher performing units closed in July.
Days on market remained long at 137 days, and the list to sales price ratio remained the lowest of the segments that we discussed at 95.5%.
That means the average oceanfront condo sold approximately 4.5% below its final list price.
And that doesn't include any additional seller paid repairs, closing costs, credits, or furnishings that may have been negotiated.
The current average active list price is $302,000.
Buyers looking at oceanfront condo buildings should compare similar buildings, views, floor plans, rental histories, conditions, and definitely HOA structures, not just the broad averages.
Oceanfront buyers may still have the most negotiating power.
But they also have to do the most homework.
HOA fees,
Insurance,
special assessments,
rental income,
building condition,
financing restrictions,
upcoming renovations,
and the true cost of ownership after closing.
For oceanfront sellers, strong photography and an optimistic price are not enough. Now let's talk about new construction, because the July numbers may surprise some people.
The average sold price increased to $452,000. That's a $46,000 increase from June.
But just like with resale homes and condos, the mix matters.
More closings in higher priced communities, larger floor plans, premium lots, or heavily upgraded homes can raise the monthly average.
Builders also closed at an average of 98.6% of the list price in July.
Now that's higher than May and June.
That tells us builders are generally protecting their published prices.
But that doesn't mean that they are offering nothing to buyers.
Approximately 37% of July new construction buyers received concessions.
And those concessions ranged from $1,000 to $33,000.
But most were still $10,000 or less.
Right, so the $33,000 incentive makes a great advertisement.
But it was not the typical deal received by most buyers. Builders may offer more on a completed inventory home, a home that needs to close before the end of the reporting period, or a property in a community with more available inventory.
And another buyer may receive very little because the floor plan or neighborhood is already selling well.
That is why you cannot compare new construction deals using only the advertised base price.
Exactly. You have to compare the full package, the purchase price, the interest rate they're giving you, the rate buy down cost, closing cost assistance, lot premiums, structural upgrades, design upgrades, appliances, blinds, washer, dryer, completion timeline, HOA and community fees, future resale potential, and so much more.
It all matters, and the builder offering the largest incentive is not automatically offering the best deal.
Exactly. And the home with the lowest base price might not actually have the lowest final cost.
Always have your own representation before visiting the model home.
You know, the builder's sales rep might be great, but they work for the builder, not for you.
Your agent should help you compare the entire transaction and protect your long-term interests.
So what's the big takeaway from the July closings?
This is not one market. It is several different markets moving at different speeds.
The single family inventory remains tight.
Buyers may need to move quickly on the right home, but sellers still have to price and prepare it correctly.
Condos and townhomes are actually improving finally, especially in the Carolina Forest area. But buyers are carefully comparing HOA fees, insurance assessments, and their total monthly cost.
Oceanfront condos still offer buyers the most leverage, with 9.1 months of supply and an average sale at 95.5% of list price.
And that creates negotiating opportunities, but buyers need to investigate the building expenses and potential assessments very carefully.
New construction prices increased, while builders continued offering targeted incentives.
So compare the entire deal, including the price, the interest rate, closing costs, upgrades, and lot premium, not just the advertised incentive.
For sellers, the message is simple. Single-family conditions are stronger, but condo and oceanfront sellers face more competition.
Price it right, present it well, and understand what buyers are comparing your property against.
Whether you are buying, selling, building, remodeling, or investing in the Grand Strand, we can help you understand what these numbers mean for your specific property. Subscribe for more Myrtle Beach market updates, community tours, and honest real estate information.
Let us know in the comments which part of the July market surprised you the most.